All right, let's take a look at this NAS 100 chart and kind of show you what I've been looking at, what I drew, what I expected to happen, and also how I use and when I use the Fibonacci retracement. And I got a pretty good example on here, so let's take a look at this. So as you can see right here, this is the daily time frame. And when I see huge expansion, like I mentioned in my previous video, that's when I use the Fibonacci retracement. It always seems to work. And you see that green line right there, which is the 50% mark. And then you got your next one, 61.8%. And then sometimes I'll look at that 78% area as well. So if it doesn't do anything around that 50 area, especially when you go to the lower time frame and it doesn't give you any type of reaction, that's when I wait for the next one. And as you can see, which I'll show you in 4 hours right here, I kind of drew a box at that 61.8 area. And just from the higher time frame, you can actually get in here on a trade and just put your stop loss be like right below that long wick and just keep monitoring it and keep going up, keep going up. Either you can keep scaling out. If not, you can just keep moving your stop loss so that way you guarantee profit, you know, if your stop loss gets hit after trail stopping, you know. So here I'm showing you kind of like, you know, how many bars you can get or how many pips you can win from right here. And also just kind of, you know, doing the trade setup and also showing you like what kind of stop loss you will have. And if you end up going just playing from, you know, the higher time frame as well. But I'm going to go to the lower time frame and just kind of show you as well. But when you see huge expansion is always, not always, but most of the time, this always works. So, and I'm also going to add a couple of pictures here showing you, you know, the screenshots that I took, kind of showing drawn arrow, like which way it's going to go and how it's going to come back to the fair value gap before it even happened. So that way you can kind of see that I've been expecting this. And if you enter and you kind of hold on for the long run, I believe this right here can probably mess with your emotion and you might want to get out. That's another thing. You want to stay composed always. This is the number one rule right here. Let's say you enter and you put your stop loss right below that wick. As you can see, you still haven't got hit. Yes, you could have been up profit and you could have taken it out here too. That's 100 pips or something like that. But if you want more profit and you hold on, you still need to, if you believe that it's going to go all the way to that fair value gap that I drew right there, you need to just stay in that trade. You know what I mean? So, but right here, I know it can mess with your emotion. As you can see, you were in the profit and then it comes back all the way down to your entry level almost. So yeah, that's kind of where I'm showing. But like I said, when you go down to the 5 minute, you can draw a look right here. I'm showing you this is enough right here. This right here is a lot of profit as well. So you can do that as well. But here's the screenshot right here. I'm trying to do it on the side, trying to kind of show you like, you know, what I expected to do and what it did exactly. So basically, I just went by the higher time frame. As you know, the higher time frame, frame holds more power. So I just went from the 4 hour. I saw the liquidity grab and I saw the break of structure to the downside, as well as creating fair value gap, which I marked out with the box. So, and then also from the retracement, from the Fibonacci retracement, you kind of go down to that, to the discount area, and then it's going to retrace back to the fair value gap. Now, this is not the hardest part. You can practice this. You can see this from experience. You can, even from watching this video, if not from somebody else's video, this. What's the hardest part is actually staying composed and actually having risk management. I'm going to keep saying this. As much as I hated it when people used to talk about this, now I know what they mean. You don't know. Sometimes you don't know until you experience it. Now that I experience it, I can tell you the same thing. That's the hardest part. I thought trading was like this difficult rocket science, like something that I will never understand. But once I learned how to do a proper market analysis, the hardest part is getting over your bad habits.